All right, welcome to a special edition, another special edition of OK Computer. Why is it so special? Well, my partner, Guy Adami, is here with me on the second week in a row, and we're going to have a very special guest of Deirdre Bosa. She is the host of CNBC's Tech Check. We're going to do a little WWDC preview. That would be Apple's Worldwide Developers Forum. And then I have this great conversation with the CEO, founder, and a CTO of Ezra. This is a company that in the first mark capital portfolio. Rick Heitzman, good friend of the pod, is an early investor, and he's on the board, and we're going to talk about their relationship and how Ezra came to be. I am actually a very happy customer of Ezra, and we're going to get into all of that. Guy, how you doing, bud?
I'm well, excited to be here. Looking forward to seeing D as always.
Yeah. Listen, I want to do a couple reviews before we do the preview of WWDC with D. Let's talk a little bit about hardware. You know, we've spent so much time talking about these generative AI, these large language models, and what the monetization is going to be, and who's investing in who, and how they're going to be integrated in products and services. And, you know, it's interesting. The trade, as we've discussed on many occasions, has gotten really narrowed. You've heard that expression, the picks and the shovels, and that really meant GPUs. And, you know, in the last 2 years or so, we've seen Nvidia obviously take most of the excitement in and around this trade. Yeah, OpenAI in the private markets. Microsoft's gained, you know, hundreds of billions, if not $1 trillion of market cap. Google, Alphabet just joined the party here a little bit. And I think it's interesting, though, these last few months, we saw that super micro, right? And then we saw Dell join the party. Then we saw Hewlett. Last week, we got results out of Dell. And you and I were looking at the report. And, you know, the revenue growth in the quarter wasn't as great as some would have expected relative to the move. The guidance was, you know, not as great, again, as some expected. But this was not a disaster quarter, and the stock was down 20% like that, and it's continued to go a little bit lower. Hewlett, same thing. They're talking about, you know, AI-enabled PCs, okay? That stock had a massive gap after a big run after their earnings, but it's come back and basically given back all of that. What do you think's going on here? Is this an investor just getting a little tired of this story, and they just remain so crowded in Nvidia, and they keep putting up the numbers and the product lines?
Well, I think that's a big part of it, right? I mean, there's only so many dollars to go around. And obviously, I think NVIDIA wins to much of this. But in terms of Dell specifically, I mean, I know you know this, and I'm sure most of our audience knows it as well. But, you know, this was a stock that was basically $75 or so, I want to say, earlier this year, late last year. And it obviously saw that huge move up to 179 and change. So you had a bit of a parabolic move, number one. Valuation was never that stretched, but when you have a move of that magnitude, I think it gives people some concern, and you really have to basically perform on all metrics in order for that run to continue. What troubles me a little bit is how quickly and to the extent of the sell-off that we saw, and to your point, what was not a terrible quarter nor a terrible guide. And when an individual name, and again, at one point, I think Dell was a $115 billion market cap company, when it can move 20% over the course of minutes, that's got to give you some, I think, concern or some pause. Now, I think if there is good news in terms of trading the stock, it comes in the form of where we just traded down to. We got down to about 132. And if you go back and look in April, which wasn't that long ago, the stock made an all-time high at that point of about 132 and change before selling off a little bit into May. So it makes sense in retrospect, but I guess my biggest concern is when you can see moves like this of that magnitude in names that, you know, wasn't a disaster. You have to wonder, you know, what does it mean going forward for some of these other names or maybe the broader market in general?
Yeah, and so Dell, to your point, you know, having a 25% sell-off from those recent highs, so round-tripping a good part of that euphoria. You know, if they are not able to kind of, you know, guide higher when they report in 3 months or so, I think the story's done. You know, a lot of that kind of earnings growth that we saw on a gap basis is really expected. It's built into this year, about 45%, and then a massive deceleration to like high single digits next year. And again, you could say, well, that's not incorporating, you know, what is going to be a massive PC upgrade cycle, but you and I just don't know. And expected revenue growth this year of 9%, you know, and then, you know, kind of mid to high single digits next year. Trading, to your point on valuation, 17 14.5 times this year and about 15 times next. But here's the kicker, and the same thing is true for Hewlett. This is a 22% gross margin company. This is an industry that notoriously for 25 years has been low margins, it's been cutthroat, and if your expectation is that once Google, gets their act together, let's say with generative AI, that all these companies and all these consumers are going to upgrade their laptops, their desktops, that sort of thing, they're going to upgrade their cell phones first, their smartphones, right? And companies are notoriously slow to upgrade, right? And if you can't demonstrate the productivity gains of these new models and like Copilot and stuff like that, it's just going to be pushed out. There's not going to be a super cycle. So that's my only concern. And then the other thing is that, you're going to have the Asians, laptop guys, all they're going to come in and they're all going to compete on price. It's going to be like the Apple ecosystem where it's the services, it's the software, which is the high margin, and then the hardware kind of weighs it down. Thoughts on that?
Look, I mean, the same thing's going to happen in semiconductors as well. I mean, you're going to start to see competition in the form of a number of different companies. And obviously, once that competition comes in, the undercutting and pricing is going to take place, which we've seen historically. But to your point, there's this perception, and maybe it will happen. There's going to be this massive upgrade cycle for PCs, as you said, but you have to demonstrate to these companies that are going to spend the money that spend is going to be offset in terms of margin improvement. And if you can't basically quantify that, companies are going to wonder, you're going to have to wonder out loud, is this an environment where you're going to see, I guess, that spend in the form of these companies for those desktops for their employees, and what are individuals going to do as well? So I think there's a lot of hope baked into this huge upgrade cycle for PCs, which will inevitably come. I just wonder if with the right time of the cycle for it to come, right? In terms of where we are and what's happening with the economy in general.
Right. And again, I mean, we're going to have to see how companies are going to monetize this increased investment. And that's something we've been spending a lot of time on. All right. One review of this Computex. It went on in Taipei, Taiwan over the weekend. Jensen Huang was there. He was signing women's chests. I mean, the guy, it's like a cult, okay? No. And it's interesting when, the news came out over the weekend about the 2026 AI accelerator platform, which is Rubin. We're not even done celebrating Blackwell, which is the 2025 version. This guy really knows what he's doing, keeping people, kind of like thinking out what the next thing is and keeping his competitors kind of, really humping it a little bit. But the stock opened up Monday morning up 5%. Think about that. $100 billion in market cap on a $2.8 trillion market cap, because every time he has thousands of people in front of him, it's just like, this makes the excitement around Steve Jobs's, like product introductions. I mean, it dwarfs those sorts of things. So thoughts there, and I want to read a quote when you're done because it's just pretty fascinating. This is from Jensen Huang, but thoughts on just the performance of the stock based on, the product roadmap for the next couple of years.
Well, I mean, you can't listen. There's nothing to knock in terms of the performance. We obviously, March 8th, I go back to that Friday when the stock made an all-time high and reversed. You saw a pretty significant sell-off, maybe 20% or so, but that was gobbled up. And here we are at new all-time highs effectively. So there's nothing not to like in terms of stock performance. But I think you hit it. This cult of personality now around their CEO is, maybe justified. I'm not quite sure, but we've absolutely seen it before. So I still come back to the notion that semiconductors, unless the world is completely changed, are an extraordinarily cyclical industry, and somehow people believe that cyclicality has been taken out, and this company specifically is going to enjoy these margins that they enjoyed over the last couple quarters and seemingly in perpetuity, and obviously the spend's going to continue. I'm pretty sure that that's not going to happen, and they're going to have this sort of day of reckoning. The rub really is, when is that going to take place? I think the bulls will say we're years away from it. I think the pessimists will say we're a lot closer than people think. So that's sort of my 2 cents. There's an excitement around it like I haven't seen in my 17 years of doing fast money, and probably my entirety in terms of my career on Wall Street. Maybe it's justified, or maybe it's more the same in terms of what we've seen before in this very specific sector.
Yeah, and again, Jensen Huang has obviously captured, the imagination of just people that in the tech world, in the finance world, and everyday users or consumers that are just kind of getting shit rich, along the stock. There was a quote in this Bloomberg article, NVIDIA unveils next gen Rubin AI platform for 2026. And, I'm reading this article and I just didn't understand what this means. This was from Jensen Wang, and I just want to see, maybe you can help me decode this. We are seeing computation inflation. As the amount of data that needs to be processed grows exponentially, traditional computing methods cannot keep up, and it's only through NVIDIA's style of accelerated computing that can cut back the cost. Wang touted 98% cost savings and 97% less energy required with NVIDIA's technology, saying that constituted, you ready for this, CEO math, which is not accurate, but it is correct. So I just don't know on what planet, you know what I mean, that you could have 98% cost savings and 97% less energy required with NVIDIA's technology. I just think that was a bunch of mumbo jumbo, and I think he kind of sums it up in that last sentence. And I think that's where we're getting. When you have a stock that has gone from, $100, okay, to $1,200 or whatever the hell it is right now, or $11.50 and nearly a $3 trillion market cap in 2 years, you got to keep everybody really geeked up about everything. So thoughts on that? It seemed like word
exactly
salad.
Right. I mean, and listen, I don't have the quote in front of me, and I'm sorry, maybe I can find it or put it in the show notes, but basically what he's talking about defies the law of physics. I mean, if you really think about the math that you just put out there. So I do think you get to a point where you got to feed the beast in terms of just the news flow and the excitement level. Otherwise, things start to wane. The concern, obviously, is at a certain point, you start to overpromise and underdeliver. Now, maybe it's been an underpromise, overdeliver this entire time, and good for them. But that pendulum will swing, as you know. And when we get to the overpromise portion and then not being able to deliver on that, that's when things historically have gone bad. So again, I'm going to take the man at his word, although what you just sort of said doesn't make a whole hell of a lot of sense to me.
All right, last thing, Elon Musk has been talking about Tesla as really an AI play. When you think about what their full self-driving, or as it's actually the NHTSA has said, it's got to be called supervised full self-driving, Guy, by the way. But here was an article from CNBC. Elon Musk ordered NVIDIA to ship thousands of AI chips reserved for Tesla to X and XAI. So X is obviously Twitter, and XAI is his new AI company that just raised $6 billion. Elon Musk instructed NVIDIA to prioritize shipping AI processors to a social media company and XAI over Tesla, causing a delay of over $500 million in processor receipts for the automakers. I guess CNBC, reviewed some emails about this. And so this is really interesting to me. 12,000 H100 GPUs originally slated for Tesla are going there. Is this an indictment of, just the business model at Tesla right now, that the spend right there, you know what I mean? $500 million might, this is a company that has massive margin pressure right now. We've been talking about that a little bit. And another thing is that a lot of folks, in the corporate governance camp, you know what I mean? They think that he plays fast and loose between these companies that are very separate companies. And I'd throw SpaceX and Starlink into the mix too.
Well, I mean, look, again, I can't speak to, it seems as though you shouldn't be able to make moves like that. I mean, these are all very unique companies, right? And obviously he oversees them all, but the ability to say, you know what, instead of sending those chips to Tesla, we're going to send them to Twitter. I mean, there's something to me inherently wrong there. And one has to wonder what those independent boards of each company, what say they have. But forgetting that part of the equation, what it comes down to me, if I'm just trying to figure this out, what does it say about the demand side of the equation at Tesla, where they're saying, you know what, we don't need these chips right now, better suited to send them to Twitter, because hopefully we'll see the demand for our product in terms of Tesla in the future. It just, my knee jerk is Tesla still has a demand problem.
Yeah, no, I agree with that. Certainly in China, and we talked about that BYD offering that hybrid. Again, Elon on their last call went out of his way to talk about this shift that we've seen out of Detroit and many of these Asian automakers to really prioritize hybrids. It seems like that's what people want. And Elon's telling us that's not what they're going to want in the future. So they have no plans whatsoever for a hybrid. But, BYD just announced a $15,000 hybrid that's got a 1,300 mile range, and Elon just kind of did away supposedly with the 25,000 low end model. So BYD and many of the local automakers makers are going to eat them for lunch. And, their revenue, about 20% of that has been coming from China. So again, we'll see when we start getting some of these delivery numbers. And there's always monthly data out of China as it relates to, deliveries there. So we will check that one out. All right, Guy, very special guest here on a very special program. We thought we'd bring Deirdre Bosa. She is the host of CNBC's Tech Check from One Market.
Hey, Guy, I don't know if you caught that Edmonton game, but here we go.
I did, and congratulations. And as I've said a number of times, Connor McDavid, the best player in the history of the sport. They are loaded, and that will be, if they emerge victorious, and I know you know this, their first cup since 1990. So good luck, DB.
Well, I appreciate it. And Dan, I'm sorry about the Rangers. I do know some Rangers fans.
Guy is really the one who's in mourning here. But again, let's talk a little bit. We just wanted to bring you in to talk WWDC. So that's Apple's Worldwide Developers Forum. It starts on Monday. Expectations pretty high. We talked about it a little bit in last week, and you mentioned that the stock is up on the year right now, which is kind of interesting. It's had a huge run off of its April lows. I think about 18 or 19%, still below the all-time high made a couple months ago. So, Dee, what do you think is expected here? Obviously there's been rumors that they closed the deal with OpenAI. Is there a likelihood that they're going to be able to articulate how the next version of iOS integrates with this technology and how it will be useful on the next iPhone that is released in September or October?
They better be able to. Of all the events that we've seen so far this year, from GTC to Google I/O to Microsoft Build, it feels like there are the most questions around WWDC. Even this morning, I was talking to Vinod Khosla, legendary investor here in Silicon Valley, and he just, mentioned offhand, Apple's really behind in AI. And it's common to hear that on Wall Street because they haven't articulated it very well. But even among tech circles here, there is this belief that Apple really has to do something. And it all just leads up to WWDC. And I think that Microsoft Build a few weeks ago raised the stakes because we've heard about AI-enabled devices. And I kind of roll my eyes a little bit when I hear that because it just feels like a continuation of, photo tweaking tools, of translation skills that we've already been getting. But Microsoft was able to really build this Copilot plus AI laptop that has more processing power than anything that we've seen before, more processing power than a MacBook. And this recall feature, which was really interesting, which felt like the first genuinely real generative AI feature or product that we have on device. And Apple is device king, right? Yeah. With the iPhones, an install base of 2 billion. So no one's really counting them out of the AI race, but they need to tell users, investors, developers what they're going to be able to do. And I've spent a lot of time thinking about the hardware of it all. You had Rabbit and Humane, that AI pin, come out earlier this year, and expectations were so high that we were going to get this new device of the AI era. But what I've come around to is it's still the iPhone. The iPhone is still multimodal. We shouldn't even be calling it a phone anymore. It can hear, it can see, and you can type on it.
Yeah, I would just say this, Guy, before we get to kind of the stock performance and how you're thinking about that. I mean, listen, Microsoft has tried to attack Apple on many occasions since the iPhone was announced, in 2007. I remember Steve Ballmer kind of laughing it off. Do you remember, who's going to pay this for that? Who's going to be banging on a piece of glass for this or that or whatever? And they just haven't, they had the Zune media player that tried to come after the iPod. They've never really, fine, Surface. I don't think the Surface PC has ever taken any meaningful share except from the NFL with all those guys on the sideline kind of looking at what they did wrong in the last play. So to me, I'm not worried about the hardware. I think that if they're going to cause an upgrade cycle in the iPhone or the iPad, which is severely slowed, you know what I mean, that sort of thing, they're just going to really need to articulate something that's a whole heck of a lot better than what exists. And I just don't think that's coming in 2024. So to me, I worry a little bit that the expectations are too high. If you look at the stock, again, I just said it had this huge move from like 165. Here we are at 195. The prior all-time high is at 200. We've spent a lot of time on Fast Money talking about valuation. I know no one cares about valuation in a secular kind of move like this, but how are you thinking about this? Because for a meaningful breakout and the establishment of a new range above those prior highs, you're going to need to see something fundamental. You're going to need to see, just a ratcheting up of expectations widely across the street.
Otherwise, it continues to be multiple expansion, which people can justify for a myriad of different reasons. And this move, as you mentioned, this move has taken place since, I want to say, April 19th, April 22nd or something, when the stock was trading 165 at the current levels. It's basically, by the way, for those playing at home, it's the same move we saw in October of last year and basically into middle of December, when I think the stock, Dan, made an all-time high of 199.62 or thereabouts. So we've seen moves of this magnitude before to the upside. Couple different times it's been thwarted. So we'll see. This is a pretty obviously important level technically, and people will talk about the sort of gravitational pull towards $200 for whatever reason. But to your point, they basically need, and I think Deirdre made this point really well. They really need, it's put up or shut up at this point. Otherwise, it just continues to come down to people paying more for what already is an expensive stock.
Right. And Dee, when you think about this, just from an earnings perspective, it's trading about 30 times this year, 27 times next. Earnings expected to grow maybe mid to high single digits this year and next, with sales growth really anemic this year, 1% and maybe 5% next year. So, we can all envision, an upgrade cycle across their total product platform, across services, right, which has that higher gross margin and the like, where, maybe you get to double-digit earnings and sales growth next year, and it supports, a 27, 28 multiple. But if you think about some of the other multiples we're seeing in a Microsoft, which is fairly similar, they have the goods right now. And I guess that's the main point, the main point that you've been making.
They?
Well, at least that you just mentioned Copilot. Okay, so that's the software. Copilot Plus on the hardware, you can make, the first good argument for Microsoft, like a multi-platform sort of approach. And then if you infuse it into, Office and everything else, I just think that, again, at least they have the story right now.
Yeah, but they have the story. Do they have the sales? Yeah, but maybe not as much as everyone was expecting. And still, Microsoft's valuation has shot up. It's become a bigger company than Apple over the last year or so. So it doesn't, my point, I guess, is that it doesn't take much. You just need to tell that story. And Apple has this opportunity. And it's really, I think, the voice part of it is what I'm most looking forward to hearing. How comfortable are we? And how comfortable is the mainstream with talking to devices? We are a voice household. My kids talk to the Echo devices all the time. And that is their primary mode of interacting with computers. And that's what, Brad Lightcap at OpenAI has said. He says that the next generation isn't going to be swiping. If your kids, they get to a computer and they try and swipe on the screen, the next generation is just going to try and talk at a screen, because that's the interface that they're comfortable with. And going back to that, 2 billion plus install base with Apple, if they can do some kind of partnership with an OpenAI or with a Google or whoever it is to get Siri to be, a killer app on that hardware that's already out there, there's a real opportunity. And do they need to do it in the same way that Microsoft has really sold Copilot, which I don't think they have? Maybe the story's good enough.
Yeah, well, listen, I think Guy and I are in that same camp, and we're going to see that when we get to the calendar Q2 earnings, in late July. And I think that could be the sort of sea change that we have from a sentiment standpoint. We've already seen it in enterprise software, from Salesforce to Workday to ServiceNow, some of the, like the Zscaler, the Palo Alto, and the like here. So if they don't have the goods when they report in late July, I think the whole sector, just like last summer, could be, it could really take the whole market down for a little bit here. So listen, Dee, we're going to let you go. Guy and I are going to continue to bandy about here on the WWC and the ecosystem. I know you got to get on TV. We really appreciate you being here. Thanks so much. Guy, it's interesting to me when you think about expectations for Apple. I just don't know. If Sam Altman does not walk up on stage with Tim Cook, okay? So he is obviously the CEO of OpenAI. If they don't have this kind of kumbaya moment, because a lot of folks have just thought that, OpenAI is obviously now in Microsoft's pocket. They invested that $13 billion. They got out in front of all their competitors as far as integrating generative AI across many products and services and the like. I'm just hard pressed to see how talking about all these things that they will develop in the future, right, that may or may not be on the next iPhone or the next iPad or the next Mac. I just don't know how, to talk about from a price standpoint. You just said this perfectly. Maybe it's multiple expansion. Maybe people are willing to bet on the future, but how do you get the stock going higher, right, if you don't have the expected earnings growth or margin improvement? Because to me, that's where the rubber hits the road.
Yeah. So at this point, and I don't know the answer to this, and I'm not suggesting that I do, but who needs who more? Does Apple need OpenAI more or vice versa? And, quite frankly, I mean, it would seem intuitive that anybody would need Apple more. But the reality of the situation is in this environment, maybe we're at a point where Apple needs OpenAI more than OpenAI needs Apple. So we'll see. And I think to your point, it's going to be interesting to see if there is some sort of kumbaya moment and some sort of an announcement. And I think it's imperative for the stock, I think, to continue this run for that to happen. Now, a lot of what Apple, and we've talked about this on Fast Money, we talk about it on Market Call and on the tape, and we'll mention it here as well. I mean, so much of what drives Apple is, this passive investing, which has been obviously de rigueur over the last 7, 8, 9 years or so. And when you have a name like Apple, which is one of the top 10 to 15 largest holding in over 300 ETFs, as money flows in, Apple wins to that. And I think to a certain extent, in the absence of bad news and a market that goes sideways to slightly higher, Apple wins. And I think that's what we've seen over the last couple of months. And historically, that's what we've seen. Of course, the problem is along the way, and a number of times, probably 8 to 10 times over the last 6 or 7 years, you've seen pretty significant sell-offs in this name. So it's not impervious from downdrafts. And I think your point about what's coming up, now's the time, at least where the stock is, and given some of the excitement or maybe lack thereof, now's the time they need to prove themselves.
Yeah, that's a great point about who needs who more, right? So OpenAI last valued at about $85 billion. I think they're like at a $2.5 billion annual run rate here. You can do the math on that, right? So for it to grow into that valuation, they need to do some huge deals, which brings me to Google. And we know that Google has this very big deal to secure search, right, on iOS devices on Apple through Safari. I think they're paying between $15 and $20 billion a year to Apple for that. Some of the rumor, and that's very high margin stuff. That's a big part of that services margin that we talk about all the time. So it was rumored that Apple was talking to Google for their Gemini. Gemini continues to have really bad product rollouts there, a lot of bad reviews, guy. But it's interesting. Google has rallied 33% off its April low. So it's nearly doubled the performance of Apple. And then when I look at expectations, this year, EPS expected to grow 31%, 14% next year. Revenue growth this year, 14%, 11% next year. 22.75 times earnings this year, 20 times next. So when you think about that, okay, and you think about how they've just gotten very little right, we know that they've spent billions and billions of dollars. We know that there's tremendous opportunity across their multiple platforms. They have like 9 platforms, guy, with 1 billion users, some, a handful with like 2+ or so. And it's got a 63% gross margin, which is down a lot from 2023 at 68%. So you could see how this thing ratchets back up in margin, right? And it trades really cheap to everything else. I'm hard pressed to think this is not the buy on any pullback if we were to get that summer swoon in these names.
Well, you're talking about Google, and it has been, and we've mentioned that a number of times, and you're talking about pullbacks. Well, all you have to do is go back to last fall. I mean, this was a stock that was trading 140 or thereabouts in October, traded all the way down to 115, pretty much in a straight line. You saw a similar move, I want to say, at the end of January of this year into March. And since March, Dan, you said it's a $130 stock in middle of March-ish, and now it's trading effectively right around an all-time high. I think the all-time high was 178 and change. It's trading about 172.5 now. So the good news is this stock provides you, like many stocks do, with pullback opportunities. But as many times as people say Google is broken, it's a broken model, the reality is they're probably still one of the most dominant people in terms of what they do in the world, and you can still rationalize their valuation on a number of different metrics. So to answer your question, you just don't run too far from Google. And when it does give you that sell-off, which inevitably comes for a myriad of different reasons, sometimes self-inflicted wounds, sometimes market dynamics, I think I take that opportunity to buy the stock.
Yeah, and just to put a point on it, I mean, the self-inflicted wounds is just like a lot of really bad product rollouts, like we just discussed here. But that, from a sentiment standpoint, sets up really well because expectations on the product front are not particularly high, you know what I mean, right now, despite the stock's performance. So again, I think they're going to get their act together soon enough. And then the other point I'll just make is 2.1 trillion market cap. They have, I think, 108 billion in cash, $28 billion in debt. So that net cash position puts them in a really interesting spot to gobble up, some really good talent or, acqui-hire some, like through some small acquisitions and the like here. So again, I think that one is the underdog. We will see on Monday afternoon how the stock reacts. I expect it to sell off, to be honest with you. I just don't see them kind of nailing everything that people would need to see for this thing to break out to a new all-time high. Listen, Guy, I appreciate you being back here with me. Thanks so much for doing this. I enjoy it. And you and I don't get to talk enough, so this is really fun for me. And stick around for my conversation with Emi Gal. He's the CEO, CTO, founder of Ezra, and our good friend Rick Heitzman, CEO of Firstmark Capital, who is obviously a board member over there at Ezra and an early investor.